Well, good morning, everyone. Thomas Montgomery. We get together most weekdays at 8 o'clock Central to visit with our distribution partners as well as clients. We talk about strategies, tips, technique, share success stories, and to support each of you. We're really thrilled with the evolution of the distribution model and so many of you electing to become branches, branch owners, branch models, whatever you want to refer yourselves as, where it's essentially our private label approach, whereby we're going out to the marketplace and helping clients with the credit and funding program. So having a lot of success, but we needed to refine and kind of nail down how we want to handle clients that enroll in the credit and funding program, but if they choose to not pay the refundable setup fee up front. So we're going to go through the policy as it stands and get feedback from you. So as should be shared here on the screen, we're going to talk about the topic of financing the credit and funding refundable setup fee. So let's make sure we first understand the refundable setup fee, and then we're going to come down and talk about the process. Not very difficult, so don't worry. So hopefully what we all understand is that when clients enroll in the credit and funding program, they explicitly, in writing, promise to pay a refundable setup fee. So if any of us are inferring to clients or prospective clients that there's not a refundable setup fee, that's inaccurate. There is a refundable setup fee. So is it a free program? No. Is there a refundable setup fee? There is. Now, with that being said, you're choosing what that fee is, but we'll get to that in a moment. So the first question that you may have is, well, why do we need to have a refundable setup fee? Let's just make it easier. The client shouldn't have to pay anything up front. We're doing work. You're doing work. We're doing work. And so either you and we get paid for the work that we do, or we work for free. So it's very difficult for us to persuade our employees to work for free for your clients. And I suspect it might be hard for you and your family to justify that you should work for free to help other people. So there is a refundable setup fee, and it provides you your upfront compensation. It does, for the work that's being performed. And it covers us for our hard cost of providing the programming. So there's cost involved with operating a business. Why does it, when I go to a restaurant, why do they charge me for food? That steak and shrimp should be free. Well, it'd be great, I guess, for the customer, but there's a cost to provide services or products or programming. So, and what we're offering is an exceptional value, nonetheless. So clients, when they enroll, can either pay the refundable setup fee out of pocket. And on average, we see about 50%, about half the people do that. And then others want to finance it. So if they want to finance it, it's okay. They're not being punished. And in fact, we have guaranteed approval on the financing. So you're not going to lose a deal because the client says, hey, I want this, meaning the credit and funding program. I want this, I need this, but I can't afford the refundable setup fee. And you say, well, it can be financed. Well, no one will finance me. I'm too high risk. My credit's poor. I've not paid my bills in the past. That's not an objection that they can come up with, right? Because we have guaranteed approval financing for the refundable setup fee. And we're going to go through the terms of that financing today, so you know up front what those terms are. And no, it's not high interest rate. So we'll get to that in a moment. Bullet one, it is so important that you assimilate that as a branch, you are determining how much the refundable setup fee is. You're determining that. So if you feel like it's too much, look at yourself in the mirror and reduce it. If you feel like it's too little, look at yourself in the mirror and increase it. Right? You control as a branch how much the refundable setup fee is. So it's normally, and the template that we provided you is right at 2,000. And you know, we split it 50-50. So it's putting 1,000 in your pocket. The 1,000 that comes to us isn't profit. We spend that much on the programming. So that's the reason that we have to have at least 1,000 on our side, because otherwise we're losing money. For us to lose money every time you enroll a client is probably not a real good idea. It's not very sustainable, because some of you are enrolling a ton of clients. I've already told you our top branch has referred in over 50 already this month. Many of you have enrolled 10 plus. So if we were to lose money every time you enroll a client, it wouldn't take long until we just became buried in debt. So we're not going to do that, right? So we need to cover our hard cost, and I'm assuming you probably would like to have upfront compensation. So if you want to make this more, make it more. If you want to make it less, make it less. We split it 50-50. But again, our portion needs to at least cover our hard costs. So you can do the math. If you drop it below 2,000, then it's really not a 50-50 split anymore, right? Because we've got to have at least 1,000 to cover our hard costs. So hopefully that makes sense. That's not changed. That's what's in Exhibit B of your license agreement. No change there, just clarifying. Now, if the client would like to finance the refundable setup fee, we have a structured approach. So now we're going to just clarify, here are the terms. So you know up front, if they want to finance it, there's no, well, let's see what happens, or we'll figure out what the terms will be. That became too complicated. That was okay when we were moving along at a slow pace, but we're growing exponentially, which is wonderful. It's a blessing, and it's great for you all. You're making a ton of money, and we're helping a lot more people. But we need to standardize this. So this is the standardization. So if someone wants to finance the refundable setup fee, we have an arrangement with a 501c3 nonprofit microlender. So we're going to take them to that one specific finance organization because it's the best possible finance terms that are possible. So first of all, this nonprofit is offering a 0% loan. 0%. You don't get lower than 0%. No one can complain, oh, that's predatory lending. It's 0%. It's what you would call in economic terms free money. So there's number one. If they're going to finance it, we're going to go through 509 Pacific, and they're going to get 0% interest. Can't beat that, right? Second, which makes it even better, it's a credit builder loan. And so what that means is it reports positively on the client's credit. It's a new trade line, right? Because that's part of what we promised to do with the credit and funding program is help them build their credit. And the credit boost is the concept of adding new trade lines. Guess what? Here we're already delivering their first trade line. Outstanding, right? And they're not buying a trade line. They're not paying for a trade line. It's free. The payments are going to be structured and consistent, so we don't have to have questions. We know the answer. If they're going to finance the refundable setup fee, the payments will be $250 a month, and they will be due on the first of each month. Simplify. There is going to be a down payment of $250. Now, Timothy's already got the first question. What if he's changing this? Still going to be the same terms, 0% interest, still credit builder loan, monthly payments are still the $250, still going to be a $250 down payment. Now, the number of payments, of course, could be more or less based upon what you've decided to charge the client, but these terms will be the same. If, obviously, you pick a dollar amount that's not divisible by 250, then their final payment would be a lesser amount, which makes sense, right? Okay, so note, if the client finances the refundable setup fee, then we're still doing the 50-50 split because we've covered that from the beginning, right? That's the concept of the branch, the private labels. We do a 50-50 split of the income. So if they're paying $2,000 up front or whatever amount up front, we split it 50-50. If they're paying payments through 509, We still split it 50-50, but then it's paid out as earned. So this is what that term means. Those of you that have an insurance background, it'll make sense. But each month, the client will make a payment. As the client makes a payment to 509 Pacific, and that generates the commissionable event that is split between you and us. If they don't have the 250, then we can use the opportunity fund, and we'll get to that here in a moment as we scroll down the page. But I want to stop here. So we're not yet talking about the process, which we're going to next. But here is the standardized approach that we're going to take if they're wanting to finance the refundable setup fee for the credit and funding program. Who has questions or concerns about that? All right, Sarah asked, well, what if they can't afford $250 a month? Well, then they wouldn't want this financing, would they? Because this is, we're being very transparent and clear. We're letting them know if they want to finance it, here's how it's going to work. They can pay it up front, or yeah, they can go put it on their credit card. They can go finance it somewhere else if they want better terms or different terms. But if they're wanting to finance it, here are the terms. So this makes it simpler for you and for us. We can enroll more clients more quickly, more efficiently. So this is the deal. Now, from your perspective, you would probably prefer that they pay up front, because if they pay up front, whatever amount you want to charge them, then you're getting your money up front. If they pay payments, then it's paid out as earned, and you're getting a little bit each month. So that would be your probably motivating factor as you're speaking with the client about how they can pay the refundable setup fee. Because they're paying you, right? Their contract through the branch model, private label, clients are contracted with you, and they're paying you either the amount in full, or, and we'll get to the process again in a moment, they would pay you the down payment. So you're going to be collecting either way. So if you've not collected either the down payment or the amount in full, then there's no reason to forward the agreement in for processing. It's one of the two. One of the two. Everyone clear on that? All right, so let's go down and let's talk about the implementation process, the flow. So scroll down. So step one, you, the branch, you enroll a client, and they do that by signing your credit and funding program agreement. You may be using DocuSign or Adobe or FormStack, whatever e-signature software you want to use. That's between you and your client. But you get the client under agreement. That's where the client becomes a client, is when they have a contract with you. So that, I think, is clear. As we've discussed, there are two options on the refundable setup fee. Either you collect the entire amount from them in advance, which is fine, or you collect $250 down payment if they want to finance it. So there's only these two options. Now, Lon's on here. Lon has a little bit of a different approach, and I think it's a good one, but he's different than this, but I'll describe the Lon model, and you could replicate it if you want. Here's what Lon does, to the best of my understanding. When Lon enrolls a client, he says, okay, great. There's a refundable setup fee of $2,000. Client, do you want to pay that up front? Yes or no? Because you don't want to hide the fact that they could finance it, but you'd obviously rather them pay up front. And so if the client says, no, I can't, or I won't pay it up front, I need to finance it, then what Lon does is, well, he'll ask them, well, what can you afford to pay now? And we'll finance the rest. So Lon, on average, is getting $500 as a down payment. That's his approach. And that's fine. It's just a bit more sophisticated. Lon can do that. You can do that if you want. So the minimum down payment is $250. But certainly we're not asking Lon to change or any of the rest of you to change. You could just simply ask the question to the client, hey, if you need to finance it, what can you afford to put down now? And then we can finance the rest at 0%. So the rest of these terms would still apply, but it certainly is possible that you would collect a larger down payment if you wanted to. The benefit, of course, is it's more money in your pocket up front to offset the time and effort, energy you're putting into it. So, Lon, hopefully that was okay that I shared your story, but let's move on. So let's review it. So client enrolls, then you're collecting the setup fee. You're collecting the setup fee either in advance or the down payment. Third, you're going to help the client complete the soft pull. That's a soft pull, no hard inquiry. You'll see that link on your branch onboarding. We need that. And Mr. Barchi, I see your question, and we're going to come back to that in just a second. So now you have a client under agreement. You've collected either in part or in whole the refundable setup fee, and you've helped the client complete a soft pull. Now you have a complete file ready to transfer to us. At that point, then you're going to forward the agreement to us. We're going to load the client on our end. We're not going to contact the client, but we need to know who the client is and get them set up, because obviously we're providing the programming and the background for you. So you'll forward us the client agreement and our half of the setup fee, whatever you collect, half of what you collected. If they paid in full, you send us the full. If they're going to do financing, you send us half of the down payment you collected. The down payment should never be less than $250. Thus, $125 to you, $125 to us. And then we'll implement the client. What does that mean? Well, then we'll be working together. We'll have a planning call. All of you that are deciding to be one of our VIP branches, which we had training on yesterday, we're going to be setting up starting next week a reoccurring daily slot that's saved for you. For example, I'm just making up 9 a.m. or 2 p.m. And so that's your slot every day. So we can get together briefly on a daily basis, talk about new clients, talk about questions, talk about concerns. So that's one of the benefits of being a VIP branch are those daily calls. If you're not wanting to do the VIP model, which means you're planning on enrolling at least one client a day, then of course we just use Calendly and schedule as we need. But the bottom line is, once the client is onboarded, then we have the client planning call, and then we develop the plan to start helping them improve their qualifications, the 3 C's. If they have financed the refundable setup fee, then, not before then, but then we'll get their financing set up for 509 Pacific for the balance owed. So in other words, whatever you decided to charge them for the setup fee, if they financed it, they paid some portion of that as a down payment. The difference between whatever you have as your setup fee and the down payment that they paid is the amount that needs to be financed at 0% interest through 509 Pacific as a credit builder loan with $250 monthly payments. 5C, then we know that we're going to help every client raise at least $100,000. We promise that. It's guaranteed in writing. That could happen in one tranche or multiple tranches, depending upon the client's mitigating circumstances. Once they've reached at least $100,000, then they get the refundable setup fee back. So now let's go to Mr. Barchi's question. So we know that we have a consortium of about 40 different lenders that theoretically we could have shopped each client to help find financing for the refundable setup fee. Instead of doing that, we're going to standardize it as it's stated. And then when we're having our little powwow, our client planning call between us and you, because then we'll have the client soft pull, then we can discuss if we want to go ahead and look at some initial and immediate funding offers for the client, because the soft pull should give us enough to be able to make some inferences if they would qualify for any funding immediately, even before we start working on their file. So Mr. Barchi was asking, well, we used to get that app and look at all funding offers up front. Now that will be once the client is onboarded and we're implementing. So that's still available. We'll still be doing that. But for the purpose of anyone that wants to finance the refundable setup fee to accommodate our growth, we've been plodding along, and I mentioned this yesterday. We've been plodding along at about $3 million a month. And so, I mean, that's a decent sized organization. But now with the new branch model and the type of production that you all are generating, we're about we project to be about triple that. So we should be on an annualized basis about $100 million annual revenue organization. So that's great. But when an organization triples in size, we've got to find some efficiencies and standardization. And so this is the way that we're going to standardize the refundable setup fee if they want to finance it. Now, again, I think we're all best served if they pay up front. But now you know up front exactly what that financing will look like. And so if they need to finance it, you can explain to them up front instead of saying, well, we'll see. You know, we'll get an app and we'll see what you get. Well, maybe they wouldn't have liked the interest rate. We don't want them to have any buyer's remorse. So here, you either collect from them up front, whatever amount you want, or you know exactly the terms for financing. So I think it's better. But again, back to Mr. Barchi's question or concern, not a problem. We will look at immediate funding offers for them. So even though they just enrolled, many of these clients are going to be able to get an initial tranche around of funding right away, even before we've worked on their 3 C's. And we don't want to take that away. We want them to start getting funding as soon as possible. And that'll be a discussion that you and I will have during the client planning call. Okay, one more point on the agenda, then we'll open it up for questions. Opportunity Fund. So the Opportunity Fund, it's evolved through the years, but the concept is that there are some people that are insolvent. They're broke. So does that mean we don't want to help them or can't help them? Absolutely not. We don't want to turn anyone away. When we put together the grant request and we get the approval for the grant funding for what we do, it was predicated on that we won't turn anyone away. So let's say that you sign someone up, you give them the option to pay the refundable setup fee up front, and they say, oh no, let's say it's Vicky. Let's say Vicky's talking to them and they say, oh no, I can't afford that refundable setup fee. So then Vicky would say, not a problem, not a problem. We can finance your refundable setup fee. We work with a nonprofit, 501c3 nonprofit microlender, guaranteed approval. They don't charge any interest, at 0% interest, which is great. It reports positively on your credit, so it's going to boost your profile, boost your score. Payments are very low, but there is a small down payment. Now, so then the prospect in this role play, the prospect says to Vicky, well, that's a problem. I am stone cold broke. I don't have any money. Vicky doesn't have to say, oh, too sad, too bad. She would say, not a problem. What we have is the Opportunity Fund. So instead of because most people don't want free. People don't want handouts. People have pride, especially entrepreneurs. So they're looking for more of a hand up than a handout. So what Vicky or any of you could say then is, hey, not a problem. We have the Opportunity Fund. So what that technically means is that client, that insolvent client that doesn't even have $250, you would essentially make them one of your referral partners. They would be an affiliate to you or a referral partner to you, whatever label you want to make it. And they can go out and they can refer clients to you because they know other people that maybe need help with credit and funding. And then what you would do is you would pay them $250 based upon closed deals. So essentially they're a paid referral partner. Well, the first $250 that you would owe them after they've sent someone in that has signed up, then instead of paying them, you would apply that to their down payment. So it's like work study. You remember back in college, I know when I was in graduate school at the University of Minnesota, that I worked for the university. And so It was like $12 an hour or something. It wasn't much, but again, this was a few years ago. But I worked for the university, and they discounted my tuition in addition to paying me that modest $12 an hour. Well, this is kind of like a work study program. If someone wants to be in the credit and funding program, but they don't have money for the refundable setup fee, then you have what's called the Opportunity Fund, essentially a work study program to help them cover that. All right, so let me make this a bit smaller. Who has questions, comments, concerns on the standardized approach to financing the refundable setup fee? Obviously, in everyone's best interest for the client to pay up front. That would be preferable. That would be easiest. But if the client can't or won't, we don't want to shoo them away. We don't want to deter them from participating. Instead, we can offer them guaranteed approval financing with the terms that we've discussed. It is your responsibility as the branch to collect the down payment. Everything beyond the down payment can be financed at 0% interest through the nonprofit lender. We've gone through the process. You enroll clients. You collect the refundable setup fee, either in its entirety or the down payment. You help the client complete the soft pull. You forward the client agreement in our half to us. Then we're going to get on the phone. We'll have a client planning call. We'll see what type of funding offers they qualify for immediately. We're going to work with them to build their credibility, their 3 C's. If they financed it, we'll get them set up with 509 Pacific, so that's formalized. Client's going to receive a minimum of $100,000. That's our promise. That's our commitment. That's our guarantee. Might happen in one tranche or multiple tranches. Once the client has reached at least $100,000, they get the refundable setup fee back. And that's paid for by the grant. That doesn't come out of your pocket. So who has questions, comments, concerns on any of this? So Adam has the next question here. Are we recommending that you, the branch, pay your referrals $250? Well, it's up to you what you want to pay your referral partners. You could pay them more, you could pay them less. But from the Opportunity Fund, I would recommend standardizing that so they know that they could refer in one client to you, Adam. That client that enrolls and pays, of course, is generating around $12,000 for you, gross income, $6,000 net income. So I think it's reasonable to pay them $250 for bringing you a $12,000 deal. And that first deal that they bring to you will cover their down payment. Make sense? But you could change the amount that you pay your referral partners. That's up to you. And then you can have a formalized approach or an informal approach to how you pay your referral partners. We're going to be having a training on that here coming up soon to better equip you. But just like we have affiliates, we've now developed over 10,000 contracted affiliates. That's a lot of people. Now, some of them are active and some of them aren't, of course. But you may very well want to consider as a branch developing an affiliate model whereby people are encouraged and motivated and compensated to refer to you. And so you could do that informally or formally, but we'll have an upcoming training on that. Again, if you need individualized assistance, we encourage you to call us and or text or email. Things are going really well. We're growing very quickly. Those of you that have decided to be VIP branches are getting a nice stream of hot leads that are coming in, whether it be email-based leads or phone-based leads. Those will continue. If you're not familiar with the whole VIP branch model, please go back and view yesterday's training. I emailed each of you today and included a link to yesterday's training. Anyone else have questions on this standardized approach to the refundable setup fee? Brenda, let me pick on you for a minute. Brenda, you and I talked this morning. You're one of our newer branches. You've got about 5 clients that looks like they're about ready to come on board. Brenda, how do you feel about this standardized approach to the refundable setup fee? What's your feedback? Eric, I think you have 10, if I remember correctly, 10 new clients that you're enrolling today. I don't know how many of them had planned to pay up front, if you've had that discussion with them yet. But Eric, what's your perspective on this standardized approach? Anyone have any questions? Oh, Eric has 14. Okay, sorry. But so this is a standardized approach. So we're all clear. If they're wanting to finance the refundable setup fee, that's fine. But now we know upfront the terms. Before, we were getting a finance app and then doing a lot of work to go see what offers they had. And then it was a bit unpredictable. And then maybe they didn't like the interest rate or what have you. So now it's standardized, it's simple. And I don't think you can beat it, right? Because just adding a new trade line is powerful. We don't believe in selling or buying trade lines, but to provide these clients for free a new trade line is very valuable in itself. And of course, the financing at 0% interest, no one could debate that. That's as good as it gets. The monthly payments are standardized, and if they can't afford it, then, or they're concerned they can't afford it, then you bring them on as one of your referral partners and they earn it, right? Because that's the way it works in business, right? You earn money. You earn money. And so if their business doesn't give them enough free cash flow to afford the $250, which is a refundable setup fee, right? It's coming back to them. Remember, it's coming back to them. But if they don't even have enough to pay monthly payments on the refundable setup fee, then we've just overcame that. We've offered them an ability to earn the money, right? So no one should be left behind, and it's great for you. You're making, on average, $12,000 gross income every time someone is referred to you. And so why wouldn't you pay out $250 to generate 12,000 gross, 6,000 net income? You'd be crazy to not do that, right? You'd be willing to do that 1,000,000 times a month if you could, right? Because you're cash flowing so positively. All right, well, that's where we're at. Thank you for your time, and we will see you back tomorrow morning. Have a great day. Bye-bye.